Hi there. Today I want to share some significant updates regarding New Zealand's Active Investor Plus visa, which will take effect from 1st of April 2025. Furthermore, the government has announced some changes to come into the Foreign Investment Fund tax rules and the Overseas Investment Act restrictions, which were major deterrents for overseas investors, limiting the inflow of capital. These government updates aim to increase investor confidence, remove tax and investment barriers, and make New Zealand a competitive destination for high net worth individuals. Now, a little bit about me and my services. I am Tatiana Ellery, a New Zealand licensed immigration advisor, the founder of Aspiring Immigration Services, and immigration advisor at New Zealand Services also. With a background in immigration law, HR, finance, and business strategy, I am based in Wanaka, South Island of New Zealand. I assist and represent individuals and their families from everywhere in the world who wish to start or continue a life in New Zealand and who need to secure relevant visas either through investments, entrepreneurship, employment, studying, or through family connections such as parents, children, or partners. I also advise and represent New Zealand employers who seek to hire or retain their migrant workforce. What type of services do I provide? I provide tailored visa solutions for individuals and families. I provide expert immigration strategy and compliance advice and business migration support for those who are looking to invest, acquire, or establish businesses in New Zealand. If you're considering investing in New Zealand or looking for a clear pathway to residence, let's discuss your option through a consultation which you can book on my website, aspiringimmigration.kiwi or New Zealand Services. Now, the background and rationale behind those changes. The New Zealand government recognized that the previous investment thresholds and focus on higher risk investments were deterring potential investors. This led to a notable decline in applications and investment levels compared to earlier programs like the Investor 1 and Investor 2 resident visa. To address these concerns and stimulate meaningful investments in the country's economy, the government has introduced more flexible and appealing criteria. So let's compare those criteria between the existing and the future policy. First, the investment thresholds. Under the existing policy, you need to invest a minimum of 15 million New Zealand dollars or its weighted equivalent over 4 years in New Zealand. Under the new settings, you will have the choice between two categories. The first one will be the growth category, which will require you to invest a minimum of $5 million as opposed to 15 into direct higher risk investments into New Zealand businesses over a period of minimum 3 years, which is one less year than previously. Or you can invest into the balance category settings, which will require you to invest a minimum of 10 million over 5 years, which is one more year compared to the existing policy, but broadening the scope to include bond and property types investment, which were previously excluded. So now, what are the acceptable investment types? Under the existing policy, you may invest into direct investments into private businesses, which would carry a weight of 3 times its New Zealand dollar amount, or invest into managed funds like private equity and venture capital for 2 times the weight, or into listed equities and philanthropy, which will carry its own weight multiplied by 1, and it's capped too. Under the updated policy, you will be able into the growth category to invest into direct investment, same as now, but with a lower entry threshold. Or if you go into the balanced category, you will be also able to invest into bonds and property investments, which were not previously considered acceptable, and that provided a more balanced approach to investment. Now, what are the residence requirements once you've satisfactorily invested in New Zealand? Under the existing settings, you need to have spent at least 117 days in New Zealand over the 4 years of investment. But under the new settings, you'll be able, under the growth category, to spend only 21 days minimum in New Zealand over 3 years. Or if you go for the balance category, you will need to spend a minimum of 105 days in New Zealand, which is still less than currently. And you may be able to reduce the number of days you spend in New Zealand if you invest more into certain funds or in certain categories of funds. Now, what is going to be changing in practice? Well, as I explained, there's a lower investment barrier, which means you can invest as little as only $5 million over 3 years rather than 4. And the investment options are larger now, where you can also invest into bonds and property, which was not eligible under the current policy. You also have simplified compliance system, which means that the way the investments are monitored and reported will be a bit simpler. And finally, the government has announced that they will remove the English language requirement for the applicants, which will make it a bit more inclusive also. So overall, previously, the Active Investor Plus visa required a higher investment threshold of up to $15 million with stricter residency and language requirements. Also, the focus was primarily on high-risk investment, which limited the program's accessibility and appeal. The updated policy will offer greater flexibility, lower financial commitments into certain categories, and a wider range of acceptable investment options. Now, another point regarding those other updates that I mentioned earlier in terms of tax and investments. So the current foreign investment funds tax rule impose capital gain tax on unrealized gains for overseas investments. This makes becoming a tax resident in New Zealand less attractive for wealthy migrants. The government is reviewing these rules to make them less punitive and is considering a realization-based tax system where tax is only paid on actual gains upon disposal. This reform would significantly reduce double taxation issues and compliance burdens for investors. The second part of this announcement is the relaxation of the Overseas Investment Act. The Overseas Investment Act currently restricts foreign investors from buying businesses and properties in New Zealand unless they have a resident visa or tax residence, which is difficult when you are trying to secure assets. The government has announced planned reform to the OIA, the Overseas Investment Act, to allow more overseas investors to purchase assets, boosting the real estate and business sectors. These changes are expected to take effect by the end of 2025. Watch this space. So overall, we're looking at an easier investment pathway, less burdens, more ownership options, and New Zealand becoming more competitive. These changes reflect New Zealand's commitment to attracting high-value investment and fostering economic growth. By simplifying the visa categories, broadening acceptable investments, and easing residency requirements, the country aims to create a more welcoming environment for international investors. If you are considering investing in New Zealand, now is an opportune time to explore these updated pathways. For more detailed information, please refer to the official announcement from Immigration New Zealand and the New Zealand government and book a consultation with me. Thank you for watching, and I look forward to discussing how these changes might benefit your investment plans.